Hello, my name is Joris and I'm the founder of Opugrow. Today I would like to talk about CrowdStrike, one of the stocks we currently hold in our Opugrow portfolio. It has done very well for us in the last month. It is rated as a like stock, and its share price could go up with another 45%. Before talking more about CrowdStrike, let me tell you why Opugrow is unique. At Opugrow, selected stocks help you beat the index. This is our current portfolio with selected stock. You can also find this on our homepage. In the last 1.5 months, we have outperformed the index with around 4%. For our proprietary stock selection method, we start with understanding a company's business context. Furthermore, we look at its valuation, as this gives us visibility and clarity on its longer-term trend. Additionally, we analyze momentum and trend indicators. This helps us find stock that we expect that will outperform the market in the next couple of months. And at the end, all information is fed into our AI models, which results in a total recommendation. Okay, let's take a closer look at CrowdStrike and why it's a stock we really like. CrowdStrike offers a unified security platform. Their security solution improves protection of your data and access points in the cloud and on-premise, and manages user identification to prevent attacks. It is a clear global market leader within its field. For its business risk, the most obvious one would be cybersecurity and system threats. In July 2024, a large global outage took place due to a technical update to the CrowdStrike systems. It impacted CrowdStrike and many of its global customers. The total global outage cost for its customers has been estimated to be around $5 billion. That sounds massive, but the direct financial impact for CrowdStrike is probably muted, as its customer contracts shield itself from this type of liabilities. CrowdStrike has mentioned a total cost of around $60 million related to the outage. This is not very significant when comparing it with CrowdStrike's yearly profit numbers. Its customer retention impact also seems to be minimal, which is understandable as it's such a complicated effort to try and move to another competitive product. Its market value is just over $100 billion, which makes it a large cap. For the valuation of CrowdStrike, we use the discounted cash flow model. The cash flows in the initial period are based on revenue growth and cash flow margin. The cash flow in the terminal period is based on the terminal growth factor. And all of these cash flows are discounted back with the cost of capital. The cost of capital is a yearly return that both debt and equity holders expect. Let's start with revenue growth. CrowdStrike has had an historic organic growth of 24.5%. This is excluding the impact of acquisitions it has done over the years. For instance, it acquired companies like Adaptive Shield, Flow Security, and Bionic. During publication of the 2024 year-end numbers, it gave a 2025 revenue growth forecast of 21%. For our base case valuation, we use a revenue growth forecast of 23.3% for the next years. For cash flow margin, its historic margin has been 28.9%, which includes a relatively low 2024 due to its additional costs related to the outage. For our base case, we are using 28.2, slightly below its historic average. A potential positive future surprise could come out of the CrowdStrike Falcon Fund. It is a venture capital fund with a capitalization of $120 million, and it's investing in a large set of companies in the security space. For cost of capital, when looking at the debt side, the company has a large amount of cash, much larger than its amount of capital leases and debt. So it has no issues with covering any interest on its debt. Given the risk profile of CrowdStrike, we have a cost of equity of 9.8%. So we expect the equity holders to be at least making 9.8% return per year. This is above the market average. For its terminal growth factor, which is after 7 years, we use 7.8%. So these numbers bring us to a potential upside of over 45%. This is the base case. For a more conservative case, we could replace revenue growth with our 2025 guidance of 21%. This brings us to an upside of over 30%. For a more aggressive case, we can use its historic averages for both revenue and margin cash flow. Then the upside would be over 60%. When looking at the momentum and stock trends for CrowdStrike, it has done much better than the overall market in the last 2 years. It increased with 270%. It recovered well from its share price dip during the global outage incident in July 2024. Additionally, it has strong mid-term momentum. It currently has a momentum score of 10 out of 10. And it's trading above its 50-day and 200-day moving average. So it's in an uptrend market. Combining stock valuation, momentum, trend, and other indicators, our AI algorithm marks the stock as a super like. The next important date will be June 4th, when CrowdStrike will publish its Q1 numbers. In the next video, I will share with you another stock out of our portfolio. If you want to learn more about our portfolio, please subscribe to our channel and visit us on our website, opugrow.com. When visiting our website, please also read the T's and C's before using our information. Thank you for watching.